Hello and welcome to Fighting Fraud with Data Analytics and Visualization with ClearIntelligence. ClearIntelligence is one of the leading data analytics and consulting firms servicing New England and the tri-state regions. Along with our amazing partners, we can help guide you from data to actionable insights to success. We're honored to share those victories with our valued customers that cover a wide range of industries. I'm your host. My name is Will Strouse. I'm a senior data visualization analytics consultant specializing in occupational fraud detection. I spent over 5 years with one of the largest retailers in the U.S. designing and developing analytical tools to combat a myriad of internal and external fraud threats. In addition to working with Tableau as a partner and consultant, I'm very proud to support the Tableau community and Tableau Public as a co-organizer of the Boston Tableau User Group with my friend and colleague at ClearIntelligence, Dustin Cabral. Before we dive into fighting fraud with data visualization, let's begin with defining our target. In their annual report to the nations, the Association of Certified Fraud Examiners defines occupational fraud as the use of one's occupation for personal enrichment through the deliberate misuse or misapplication of the organization's resources or assets. You may be wondering what kind of industries are most susceptible to internal fraud losses. If you take a quick look at this scatter plot using the number of cases and median losses as axes and each mark representing an individual industry, a couple clear outliers reveal themselves. First of all, as you might imagine, the banking and financial industries are the most frequent targets simply because that's where the money is. High costs of labor, materials, distribution create vulnerabilities to the same kind of schemes and corruption that you associate with politics that would be in the manufacturing sector. When you include healthcare, it's easy to see how the pervasiveness of fraud schemes, along with the size and complexity of a company, follows its bureaucracy. So the larger the bureaucracy, the more chance there is for individual fraud. Not to be forgotten are the publishing, communications, energy sectors that may succumb to pressures of earnings performance against expectations, generally leading to financial reporting and accounting scams. They happen less frequently, but when you're talking about reporting financial fraud for publicly traded companies, you're generally dealing in very significant amounts. To be clear, nothing we're going to discuss today is related to cybersecurity. While it is vital for your company to make a significant continuing investment and enhancement to protect your internal records and sensitive financial and customer data from cyber threats, occupational fraud focuses on human behavioral analytics. So is cybersecurity enough to protect yourself from fraud? Absolutely not. There are all different manner of fraud that has nothing to do with the cybersecurity space. Simple corruption, extortion, bribery, bid rigging, ghost contracts, larceny, simple stealing cash out of the register. And then as we discussed about with publicly traded companies, overstatement and understatement of financial records for personal gain. There are law enforcement agencies at all different levels of government that do look into fraud cases and look for white-collar crime, but quite simply, you cannot afford to wait that long. From my personal experience and data provided by the 2018 ACFE report to the nations, we know that the longer a fraud scheme lasts, the more it costs. Sure, a significant percentage of the cases are smaller amounts over short time periods, and as one of my former retail loss prevention managers would say, a cashier rediscovers the cash post void fraud button every single day. Simple common scams are caught quickly because as security professionals, we know what to look for. The inverse is true as well. We're terrible at finding what we're not looking for. So if you're not actively monitoring your business data for fraud, you'll be waiting over 2 years and losing about $900,000 per case, waiting for law enforcement to tell you that they had found something. The passing of time is self-evident in the definition of fraudulent behavior. Fraud schemes, while they may last for years, can be reduced to a few moments in recorded time where a decision was made and the expected sequence of activities was broken. If you want to learn more about the discipline of active and evolving fraud detection, like, subscribe, and stick around for the next video. I'll pull apart time from 2 dimensions and find sales commission fraud with only 4 data points.